Every trader at some point knows the sting of a loss. It doesn't matter how experienced you are or how carefully you planned the trade. The market goes the other way and you're left staring at red numbers. For amateurs, and even for many who've been trading for years, that loss doesn't just stop at the money. It gets personal. It digs into pride. It whispers, "You have to get it back." And that whisper is where the real danger begins, because it leads straight into one of the most destructive habits in trading: revenge trading. Revenge trading is exactly what it sounds like: trying to hit back at the market after a loss. It's not logical, it's not strategic, and it's certainly not professional. But it's powerful because it's driven by emotion, and emotions can override even the best plans. The first loss hurts, but the second one, the one you take out of anger, that's the one that empties accounts. And the worst part? Most traders know they're doing it even as they click the button. They feel it in their gut, but they can't stop. It's like speeding after someone cuts you off in traffic. You know it's reckless, but in the moment it feels justified. The amateur trader often thinks, if I can just make back what I lost, then I'll stop. But that thinking is a trap, because the more you focus on recovering quickly, the further you drift from rational decision-making. You start taking setups you would normally ignore. You double your position size, convincing yourself that a bigger win will erase the pain. It's like a gambler chasing losses at the casino. Every spin, every hand of cards, feels like the one that will make things right again. And just like the gambler, the outcome is almost always the same: deeper losses, more frustration, and a shattered account. Professionals approach it differently. They still feel the sting of a loss. No one is immune to that. But they've built systems to protect themselves from their own emotions. They know that after a loss, especially a big one, they're vulnerable to revenge trading. So they step away. They shut down the platform for the day, take a walk, or journal the trade. They treat the loss like a business expense, not a personal insult. Imagine owning a restaurant. If a delivery of tomatoes spoils, you don't flip out and burn down the kitchen. You accept the cost, throw them away, and order new stock. Professionals treat losses in the same way: part of the business, not a reason to lose control. The mindset shift here is huge. Amateurs believe they can fight the market. They see the market as an opponent, a rival that just beat them in a round. Professionals know the market isn't even aware they exist. The market isn't personal. It doesn't care who wins or loses. It's just there, moving according to supply, demand, and endless factors no one can fully control. Trying to get back at the market is like trying to punch the ocean. You'll exhaust yourself, but the waves will keep coming, indifferent to your anger. There's also a psychological trap at play. When you lose, your brain shifts into survival mode. The fight or flight response kicks in, pumping adrenaline, narrowing focus, and urging immediate action. In everyday life, this response can save your life, but in trading, it ruins you. Instead of calmly waiting for your setup, you're acting from panic. Instead of seeing the bigger picture, you're tunnel-visioned on making it back. This is why some traders can blow months of profit in just a single day, not because their strategy was broken, but because their emotions hijacked their actions. So, how do you break free from revenge trading? The first step is awareness. You need to recognize when the urge is creeping in. That's easier said than done because emotions feel so natural in the moment. But one trick is to notice your self-talk. If you ever catch yourself saying, "I just need to get this back," or "the market owes me," that's your warning sign. Stop immediately. Step away. No good trade will come from that mindset. The second step is building rules that make revenge trading impossible, or at least much harder. Many professionals set a daily loss limit. Once they hit it, they stop trading, no matter what. Others limit the number of trades they can take in a session. These rules act like speed bumps, slowing you down before you spiral. And yes, sometimes it feels frustrating to stop early, especially if the market moves in your favor afterward. But think about it. Missing one good trade is far less painful than blowing your account on 5 bad ones. Another powerful tool is journaling. Write down not just the technical details of your trades, but also what you felt before, during, and after. Over time, you'll see patterns. You'll notice that the times you felt angry or desperate almost always ended badly. This reflection builds self-awareness, and self-awareness is the enemy of revenge trading. When you can see your own emotions clearly, you can stop them from controlling your actions. Remember, too, that trading is a marathon, not a sprint. You don't need to make back today's loss today. You don't even need to make it back this week. Professionals think in terms of hundreds of trades, not just one. They know that consistency over time, not quick recoveries, builds real wealth. It's like climbing a mountain. If you slip and lose a few steps, the worst thing you can do is run recklessly forward to make them back. That only increases the chance of falling further. The smart move is to steady yourself, regain your balance, and keep climbing at a sustainable pace. The irony is that revenge trading usually starts with small losses. If traders could just accept that first small hit, they'd be fine. But by trying to erase it instantly, they turn a scratch into a wound, and sometimes that wound is fatal to their account. That's why revenge trading is called the silent killer of profits. It sneaks up quietly, disguised as determination or persistence, but what it really does is destroy everything you've worked for. So the next time you face a loss, and you will, because every trader does, pause for a moment. Notice the emotions bubbling up. Ask yourself, am I about to take a rational trade, or am I trying to get even with the market? If it's the latter, shut it down. Walk away. Protect your capital and your mindset, because in trading, survival comes first. And the traders who survive the longest are the ones who resist the urge to fight battles that can't be won. In the end, the difference between amateurs and professionals isn't that professionals never feel angry or frustrated. It's that they don't let those feelings dictate their trades. They understand that revenge has no place in the markets. And once you internalize that lesson, once you truly see losses as just part of the game, you'll find a peace of mind that most traders never reach. That's the shift that separates those who blow up accounts from those who build them steadily over years.